Bitcoin fell almost 30% from its $108,000 peak to a scary $75,000. But that doesn't scream game over for the bull run to me. I'm Brett from CGX Crypto, and in this video, we'll determine if the Bitcoin bull run is really over while we go through 5 of the biggest factors. These factors include what the charts and the heavy volume $100,000 bubble image are really saying, why the Fed's higher for longer talk matters, how spot ETFs have still pulled in a giant $35.5 billion and counting, where discussions about global liquidity and the recession fit, and why a record $220 billion pile of stablecoins is dry power waiting to fire. Stick around and you'll see why I think this crypto bull run is on a coffee break rather than retirement. Since we're calling this a coffee break, let's pour our first cup by looking at the price chart. Bitcoin flew up past 105,000 in early 2025 and slid roughly to 80,000 during March's sell-off, right about here. Traders are calling this fall a pullback, which is just a fancy phrase for the price taking a breather. If we open up the full price chart here, you'll see a lot of these bright lines indicating support or resistance bands. And if we switch to the weekly timeline, you'll actually see much more clear bands for this. So here's the weekly chart. And as you can see, the lines of purple dots are the resistance, and then the lines of yellow dots are a line of support. And if we go to the daily chart, actually, it might even look even better. Depending on the time frame that you look at, whether it's daily, hourly, weekly, the lines of support and resistance are going to be marked differently. And you can mark these yourself. You can mark a giant piece of resistance, these kind of peaks right here, or at these peaks right up here. Think of support as a mental trampoline for traders that keeps the price from falling too far, and then resistance as kind of a low ceiling that makes the price kind of bump its head and stop from going too far. These support and resistance lines are just a emotional way to trade. Lots of traders see that and think, oh, okay, well, other traders are going to trade this way, so it's likely that we'll hit a support and go the other way. But it's never always the case. It changes all the time, as you can see from these many different lines of support and resistance that got broken past. There's a pretty big support at the $80,000 mark, and then an even bigger support at the about $75,000 mark. Support and resistant lines can switch. So the $75,000 mark that you can see right here is very close to the high from the 2021 Bitcoin bull run. Currently, if Bitcoin stays above these floors, the long-term uptrend is safe. And at the moment, we're way back up to the 96,000 mark. The ceiling that everybody's watching right now is right in between this $95,000 to $100,000 range. And of course, you can see the biggest resistance here, which is the all-time high range of about $105,000 plus. Breaking through those would likely invite fresh buyers. The good news is Bitcoin already bounced about 30% off of its April low, touching 96, 97,000, and breaking out of a falling channel pattern, which chart watchers see as bullish. One caution flag that we see is trading volume. This is the count of coins swapped. This dropped 15% in March. Lower volume sometimes means fewer buyers marching in, so price can wobble around more. The bottom line is, as long as Bitcoin holds this 96,000 and really stays above the $80,000 mark, and it'll keep poking at that $100,000 ceiling, the chart still is tilting upward, even if it's moving in a really slow motion direction right now. If the price chart is a game board, the Fed controls the power switch. Right now, the Fed has its interest rate. This is the fee banks pay to borrow money. It's parked at about 4.25 to 4.5%. High rates make loans pricier, which means that there's less money in the market to be invested. The Fed is also in QT, which is short for quantitative tightening. This means that it sells bonds and pulls dollars back and shrinks its money pile. The executive chair of the Fed, Jerome Powell, told Congress the easy money opposite, QE, quantitative easing, which is Fed buys bonds and pumps out dollars, this returns only when rates are at zero. In layman's terms, this basically just means that you should not expect the money fire hose to come very soon, or them to start pumping out money into the economy. Even still, the Fed's own dot plot chart, which is basically just a voting board showing where officials think that rates are going to go, it shows that 2 small cuts are penciled in for late 2025. Markets really often get excited months before these cuts happen. If jobs weaken or growth slips, those cuts could arrive faster, flipping the switch from tight to loose. So yes, tight money helped stall Bitcoin's sprint, but a future Fed pivot, when they start to lower rates, could pour fresh fuel on the market. Keeping an eye on those dots and Powell's quotes may tell us when the next big burst is going to begin. This is the Fed's dot plot right here as of March 19th, 2025. And each of these horizontal section of dots is the number of votes at that particular rate. And the grouping right here during 2025 looks like it averages around 4%, which is lower than the current 4.25, 4.5%. And obviously over time, you see that the grouping of votes gets lower and lower and lower as the years progress. While the Fed still may cut rates while Street has already plugged in a giant battery. And what I mean by this is that spot Bitcoin ETFs are in existence. An ETF is just like a fund you trade similarly to a stock, but it buys and stores Bitcoin for you. So you don't have to get a crypto wallet or actually own Bitcoin in, the kind of techie manner that most people do. So if you look at this article on Tron Weekly, you can see how much money is actually piled up in these ETFs. In 2024 alone, US spot ETFs pulled in about $35.5 billion. BlackRock, a big investment fund, has something called BlackRock's iShares Bitcoin Trust. The ticker for that is IBIT. They grabbed the lion's share, over $37 billion. This is 3 times the runner-up, Fidelity, at $12 billion. December of 2024 showed the power of that buying spree. ETFs pulled in 51,500 Bitcoin, while miners only created 13,850 coins. This is nearly a 4-to-1 imbalance. That kind of vacuum is what the pros call a supply shock. Too few coins for all of the hungry buyers. Basically, new coins entering the market are far, far less than the coins that people want to actually buy, and so the demand is outweighing the supply. Even this spring, fresh money keeps trickling in. On May 1st, Bitcoin funds logged $422 million of net inflows, with IBIT alone adding $351 million. IBIT being that BlackRock ETF. So yes, we've also seen the odd outflow day, but the scoreboard is still deep in the green. The bottom line is that big name funds are stacking up Bitcoin faster than it's being mined. As long as the wall of institutional money keeps dripping or flooding in, it's really hard to call the Bitcoin bull run finished. Big investors can only buy if fresh cash is very liquid in the market. And liquidity is just a fancy word for money that's ready to spend. One good clue is the total stablecoin pile. Stablecoins are digital dollars that you park on the blockchain, something like USDC or USDT, and you hold this essentially like regular cash while you wait to buy other crypto. This stash that is publicly available on the blockchain, you can all see it on the ledger. This stash just hit a record of $238 billion in April after 19 months of growth. This smashed way through the earlier $220 billion mark from March. Charts on Binance Square even flash a very bold image showing the line racing to 220 billion and beyond. In simple terms, there's a mountain of dry powder, aka cash, sitting on the sidelines. Next, let's zoom out to the global M2 money supply. This is the big bucket of cash and bank deposits held worldwide. Recent research shows that the price of Bitcoin usually follows the M2 with a 60 to 90 day lag. The latest uptick in M2 hints at a rebound later this year. And you can see that on this article at Crypto Slate about M2 with this chart right here following the money supply. Right here in the end of 2024, the lagged M2 money line went up, Bitcoin price went up, boom, the lagged M2 money line went down, Bitcoin price went down. And now we're seeing an uptrend and it could follow suit with Bitcoin's price. In general, this means if a growth in the economy stalls, prices will probably sag at first. But there could be a rescue, rate cuts, or even money printing. That could send that parked cash rushing into Bitcoin. So where could all that cash on the sidelines head next? History says Bitcoin usually sprints first, and then the smaller coins called altcoins get their turn. A quick way of knowing where this balance is to track the Altcoin Season Index. Back in January, the altcoin index was at about 53, which it runs from 0 to 100. Right now, it looks like we're sitting at about a 27, so we're heavily in Bitcoin season. To understand this chart, it's above 75, it is screaming altcoin season. Altcoins are going to be skyrocketing. Below 25 is Bitcoin only, Bitcoin's growth. And as we can see that when we look at the Bitcoin chart, Bitcoin has came up significantly from April it was about 75,000 up to 96,000 now. When it's sitting in the middle of this range, that means that the altcoin party hasn't really started yet and Bitcoin is probably a little bit stagnant. The next clue is to look at Bitcoin dominance. This is the slice of total crypto held in Bitcoin compared to other coins. Today it's hovering around 64%, which is the highest it's been in 4 years. In past cycles, a fall from the mid-60s toward the mid-40s marked money rolling from Bitcoin into riskier coins, altcoins, Ethereum, XRP, all sorts of things like that, and obviously lots of meme coins as well. When Bitcoin dominance finally dips and the index pops above 75, that's your signal that the altcoin wave has arrived. Alt season indicators sit in wait mode. So what's next? First, there's plenty of cash on deck. The stablecoin pile just hit a record of $238 billion after 19 straight months of growth. Second, the spot ETF fire hose keeps running. US funds soaked up $35.6 billion during 2024 and even pulled in another $422 million on May 1st, led by BlackRock's IBIT fund. Third, the Fed's March dot plot still shows 2 rate cuts penciled in for late 2025, a hint that looser money is coming, even if the timing slips. Put all those pieces together and it looks like Bitcoin's bull run is more of experiencing a long pit stop and resurgence than being at the finish line. When dominance finally tilts lower and that big stablecoin war chest starts to flow, alts can start to sprint. Until then, Bitcoin likely leads the charge. So what do you think? Drop a comment below. I'm curious where you think the Bitcoin bull market is. And if you're not even in Bitcoin yet or any other crypto, I will drop links to Coinbase and crypto.com where you can get $50 of free crypto just by signing up with those links. And if you're ready to get into meme coins, I'll leave a link to MoonShot as well. If you use that link, you can click the claim meme coins button once you sign up just to get some for free. If you enjoyed and learned something, make sure to hit that like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.